Hi everyone, Brian Valerio, VP in the Proxy Solicitation Group at Alliance Advisors, back with another Corp Gov alert. Today I want to talk about Glass Lewis's recently released guidance on compensation decisions and how it's going to evaluate and assess compensation in light of the COVID-19 pandemic. So this past week, Glass Lewis issued guidance addressing how it plans to apply its approach to executive compensation this year and how it plans to view executive compensation during the 2021 proxy season in light of the COVID-19 pandemic. One thing that Glass Lewis really wanted to emphasize is that the guidance doesn't change its overall approach to evaluating compensation. And Glass Lewis is going to continue to support proposals that effectively align pay and performance. This year, they're going to take, special consideration and really look at a couple of factors: overall pay quantum, the quality of companies' disclosure, company responsiveness to shareholder concerns and shareholder feedback. And throughout the guidance, Glass Lewis points out that it's really important for issuers to provide thorough disclosure that is going to allow their investors and other stakeholders to understand the compensation-related decisions that the Compensation Committee made this year. There are a couple of lookouts or callouts that I wanted to bring to your attention from this report, and I'll provide a link to the report so you can take a look at it if you want to go more in depth into what Glass Lewis is talking about in this blog post that I'm referring to. So one of the big callouts that I want to bring to your attention is that unless companies have performed extremely well, they're looking at this on a relative basis, Glass Lewis is going to view increases to short-term pay above targets with extreme or great scrutiny. So that's the first call out that I want to bring to your attention. The next one that I really want to bring to your attention is that Glass Lewis is going to be wary of one-time awards granted outside of a company's regular incentive schedule. They think, this is a policy for Glass Lewis, they think that those types of awards have the potential to undermine the company's normal incentive plans or regular incentive plans. So that's why they're skeptical of those one-off awards. They're also going to view any major structural changes with caution. They're going to view it with a lot of caution. So Glass Lewis thinks that boards should be really restrained and thoughtful when they are thinking about making some of these broader structural changes, because these are the types of changes that shareholders have expressed concern for in the past. Finally, Glass Lewis really pointed out that companies that have a track record of having good governance, good quality pay for performance alignments, and appropriate use of discretion by the board prior to COVID-19, Glass Lewis is likely going to view these companies and these decisions that the comp committees make through a more accommodating lens, is the term that Glass Lewis used. And they'll likely have a little bit more leeway than other companies who Glass Lewis does not view as having kind of that sound background of good compensation decisions, use of discretion, and other governance provisions. So these are some of the updates to Glass Lewis's approach to evaluating compensation in light of COVID-19. I have a link to the article if you want to take a look, take a deeper dive into some of these specific callouts that Glass Lewis wrote about in the link below. So please feel free to take a look at that link or connect if you have any questions and want to talk through these issues at greater length. Talk soon.